G'day traders, this is Sam here. Today I'll do a quick assessment on what I see with the current price action, my thoughts on what's taking place, and how I'll take this trade. Okay, so starting from the macro on the daily, I've got this daily support and resistance level, which has confluence with this major support level. I've put this macro channel in there, and we'll see how that will have a role to play. You can see the middle of this channel is currently this trend line, and how we broke below that. So we broke below the top part of the channel at this point. And when we did that in the past, you can see it's gone down to the bottom of the channel. Here, it's gone about halfway of the channel. So I will put a line there, about halfway of the channel, and see how that plays a role. You can see just from the beginning that there's a lot of support and resistance along the way, so it might play a role here as well. Okay, now going back to the current price action, go to the 4 hour, and you can see we've got this. I've used the wicks, and I've placed basically this trend line, which is justified by these two connections, and then the third. So when price broke below that, we see price dropping down. What I see currently, you can probably argue three structures in this formation. We can have the double top there. We can have the left shoulder, the head, the right shoulder, and obviously you can see the triangle as well. So just quick off the bat, we'll take some targets based on the structure. So that's the triangle from the breaking point, and we have that. If it's a head and shoulders, we'll take the middle to the neckline. I'll put it in a different color, and from the breakout point, we have that. And if it's a double top, we get from the top to roughly the bottom of that structure. And I'll put a different color on that one. And if that's the bottom, we have that. So it's a much deeper correction. So what do we have? We have confluence in this area. Of those 2 or 3, we have confluence in this red support area. The other one is down here, which makes sense because we have support or resistance, support. So there's a fair bit of confluence there as well. Which one of those is going to take place is not easy to say, but we have to get past this red section first. Now, this red level has a lot of, well, it shows that it was a major resistance for this inverse head and shoulders. And so when price broke, we had this big movement up. So this should act like a strong support area, this section here. So at this point, we have price matching this lower level. Make it blue. And what we're hoping for is a resumption of price moving up. However, you can see the resistance that is above us. So it's not going to be an easy play. What I'm thinking at this point, since we have this as the major target, this is going to play some bearish flag, maybe a parallel channel, so it just bounces around and then drops a triangle, something similar to this or this, where it's a bear flag, and then we drop. So I'm looking to take an opportunity there for short. pretty much. That's what it's giving us. Now, where can that short go to? Well, there's two levels that I'm thinking. One is this that stands out, which is already there, so that's not going to help. And the other one is here to that connection there. As you can see, the body of the candle found resistance. So we've got 2 points of resistance at this level, which is roughly 55,500. So I'll be looking to take a short there. If either performs, then this trend line. I don't see price going up anytime soon like that. If price was to break that, then I will look for support and then the bounce before I jump in. So a resumption of that macro trend. For now, on the daily, we don't have the trend. So what we have is from here to there, we have the high, but the lower high, we don't have a new high, and definitely we don't have a lower high either. So chances are that it's going to break based on this structure. Now, what else can we see from this perspective that supports this theory? Let's look at the Fibonacci. Let's get that bottom section to the top, and we have the 0.5. If we do this section here to the top, we have 0.618. So it gives us a business case for why this is a good area to jump in. In addition, as I said, this channel, so now this trend line comes into play, and you can see many times it was resistance and support. So we've got three elements that tell us you jump in here and go long. Now, if that was the case, what's the structure looking like? So let's play with that. So we have, if that was the area of confluence where price drops, price might drop to this section here. Oops. Let me just get rid of that. Clean it up a bit. Let's get rid of this as well. So price is going to come down somewhere around here. Now, it's not going to be a straight drop. I doubt it. I think it will go for a few hours sideways before it gets there. So if we were to say roughly this area there, we'll pull a line from that point to the bottom and just draw it. Just continue on this line. Okay? Potentially we're looking for a macro formation of some sort. We have these 2 points, so we just draw that. So if price was to drop, price goes up, drop, hits that level, finds a bounce, I can see that becoming a wedge. And if I was to put the middle of that wedge, yeah, that could make sense. I can move this a bit tighter. Yeah, that's just the imagination going through. And you can, if we have touches to this level, a few touches to this trend line, for instance, if we go like that, then we can see that potentially we can do that as well. We might get a double bottom, who knows, but that is the level that I'm interested in. Okay, so we have, to recap, we have three elements that confirm. We have the Fibonacci, we have the trend lines, we have the support level, and we have the structure of this with either head and shoulders, triangle, or double top to suggest that we are going deeper down. What does the indicators tell us on this? So we'll quickly cover that. So let's go to the daily. I'll bring out a template. and use previous price action to explain what we're seeing. I'll use this Phoenix indicator. When the green crosses the red, I'll put a mark there. And when the green crosses the red, I'll put a mark there. And the green crosses the red, I'll put a mark there. Okay. Now let me just, okay. Made a bit of a mess there. That doesn't help. So let's try to hide all that for the time being. Cool. And you can see when the red and green crossover, we also have crossover on this NVT. Not so here, and this one's a bit delayed, but the indicators show the crossovers has confluence with other indicators. In such a case, if we use this as an example, when the red crosses the green, the grey indicator is below 50%, and therefore we have this correction. And when you look at along the line, when on this indicator, when it drops below 50%, we have a deeper correction. Similarly, when the red RSI goes down to 50% or lower, we have a deeper correction. So these two things that I want to point out and apply them to here. Also, you can apply them to there. When the red RSI crosses the 50%, similarly to this, all three cross 50%, we have slightly a more deeper correction. And if we apply to this, currently the green is about to cross the 50%. The red isn't. Oh, actually, the red is as well. So the red is about to cross the 50%. And so if this doesn't move back up, then we are likely to have a deeper correction. So if that's the case, it does support the theory that we will hit this support line there. So we have this green, black, and red past the 50%, meaning that we're having a deeper correction. So it does support my suggestion that this support line will be next. And then we'll reassess. So what we want to see is when it does do what it does, hits the bottom, while it's coming down to the absolute bottom, we want to see this grey energy start increasing. So we basically are getting a bullish divergence along the way. Currently, we can see that this momentum is going down, and so the shorting opportunity might not be there. Okay, so that's what I have at the moment. Looking at the 1 hour, we have you would expect a bounce, so don't expect the bounce to be too high. On the 1 hour, I see this confluence there, and it would not surprise me that this is the as far. Whoops, let me get rid of that. That we have this range to take the short. Okay, so make the most of it, guys. So bounce, short, down. And that's what I'll risk to reward ratio is good. Okay, so don't miss that shorting opportunity and don't miss this long opportunity. And that's what I have at the moment. All the best, guys, and stay tuned for more update posts. Please give me a tick or a like or a follow if you're not following me. Thank you. Cheers.